morning, students. Today I am going to continue the chapter Money and Credit. In previous video I explained you about modern forms of money, that people have exchanged their goods and services from very beginning. The medium of exchange kept on changing in different times. On that basis, we can have different phases. That earlier, that is in ancient time, it is the time before the introduction of coins. Barter system was prevalent during this time. Goods and services were exchanged with goods and services. For example, grains and cattle were used in exchange processes. Then in medieval period, after the barter system, came the use of metallic coins like gold, silver and copper coins. As these were made of precious metals, so they had value of their own. Then afterwards modern phase comes. In this phase, currency notes, that is paper notes or coins, are used as a medium of exchange. These are not made of any precious metal even after used as a medium of exchange, because the government of the country authorize the currency. As the law legalize the use of rupee, so no individual can refuse a payment made in rupee. Rupees is widely accepted as a medium of exchange. RBI issues currency notes in India on behalf of the government. Now today I will explain you about deposits with bank or bank money. How we deposit money in the bank. People have extra cash with them. Those having extra cash open a bank account in the bank on their name and deposit the surplus money there. Their money is safe with the banks. They got some interest on the amount they have deposited. Depositors are those who open an account and deposit money in the banks. Depositors can withdraw their money when they require. These deposits are called demand deposits. Now what is demand deposits? Demand deposits are accepted as a means of payment because the depositors get the facility of check against it, which is used to settle the transaction without the use of money. Now what is check? A check is a paper that instructs the bank to pay a specific amount from the person's account to the person whose name the check has been issued. Bank money refers to bank deposits by people with bank which they can withdraw at any time they like. The deposits in the bank accounts that can be withdrawn on demand are called demand deposits. These demand deposits can be transferred to another person through a bank check. For an example, when Mohan makes a payment to Sohan by a check, Sohan indeed accepts Mohan's ownership of bank deposits. It is important to remember that the check itself is not money, but it performs the same function as money. Payment from purchase or medium of exchange. The bank checks are considered as bank money. In this way, demand deposits possesses the essential feature of money. Check can be issued against demand deposits. This facility helps to directly settle payments without the use of cash. The demand deposits are also treated as a form of money. Now, how check payments are made and released. Suppose a ready-made garment manufacturer Mohanlal has purchased cloth of rupees 1 lakh from a cloth merchant Sohanlal. Now Mohanlal has to make a payment of rupees 1 lakh to Sohanlal and writes a check for the amount. This means that the garment manufacturer gives instruction to the bank to pay this amount to the cloth merchant. The cloth merchant takes this check and deposit in his bank account. The money is transferred from one bank account to another bank account, normally in a couple of days. Means within 2 or 3 days that money is transferred. The transaction is completed without the payment of cash. Now suppose after getting this check, Sohanlal deposited his bank account with Punjab National Bank, Delhi. Then Punjab National Bank collect the money from Mohanlal's bank account with the State Bank of India and deposit in Sohanlal's account. Mohanlal's balance in his bank account reduces and Sohanlal's balance in his bank account increases by an amount of rupees 1 lakh. Now another example. If Suresh Kumar wants to withdraw rupees 50,000 in cash for making some payments, he will write a check and will self and will present the check to his own bank. After accepting the check, the bank will make payments to Suresh Kumar. With this, Suresh Kumar's balance in his bank account will reduce by rupees 50,000. Now, how bank is giving the loans? Bank prefer two important functions: acceptance of deposits and advancing of loans. On one hand, bank accept deposit from the public, and on the other hand, they give loans to them. It is interesting to understand the procedure and mechanisms of loan activities of banks. We know that people deposit their surplus cash money with the banks. This we call as bank deposits. Bank now, from their experience that all the depositors do not demand all the money at the same time. If all the depositors of a bank come on a particular day and ask for their money at the same time, the bank will be in trouble and not able to make payment to its depositors. But this does not happen. Normally, some portion of total deposits is demanded by some depositors at any time. Banks keep only a small portion of their total deposits as cash reserves with them. For example, Bank in India these days keep about 15% of their deposits as cash. The bank can manage with this cash reserve the demand of the depositors who come to withdraw cash on a particular day. Keeping a small portion of total deposits as cash reserves, the major portion can be given as loan by the banks. Loans are given to all types of person such as businessmen, farmers, employers, etc. for their economic activities. Bank in this way work as a mediator between depositors who have surplus funds and the borrowers who are in need of funds. Bank pay interest to the depositors and charge interest from the borrowers. Normally, bank charges higher interest rate from the borrowers of loan than they pay to the depositors. This difference is the main source of income of the banks. Now you have to write question and answers in your fair copy. Define bank. Mention the modern forms of money. Who issues currency note in India? What are the advantages of depositing money in the banks?